Okay, guys, I'm going to go through this kind of quick. I'm going to show you why I think it's possible by October 1st through December. It's possible we could have a correction with the U.S. stock market. Again, I'm just going to show you the charts, and you decide for yourself if you think it makes sense. Leave a comment below what you think. If you think it's asinine, let me know that as well. I'm going to show you why I think it's possible by October 1st through December the U.S. markets could have a correction. And also, if Bitcoin does not continue up and we have a correction, why Bitcoin could potentially test 19,000 to 13,000. And those are actually moving averages we tested before. Now, depending on where those moving averages are, depending on how low we could go if we could continue down. But again, I'm just going to show you what the charts show me, and then you decide for yourself. Before we get into this, guys, if you do like this content, go ahead and subscribe. Take the notification bell off if you want to be notified when I have live streams. And if you do like this content, guys, hit the like button. It'd be much appreciated. Before we get into the charts, all of these charts I'm going to show you, they all play out live. If you would like to access these charts, website's autocorpcrypto.com. Link be pinned in the first comment and description. $39 a month to get access to Bitcoins, altcoins, precious metals, Discord, and Twitter. Stocks and tutorials are separate. I do have a lifetime option if you want to access everything. Just contact me through the contact page. By the way, the tutorials teach you how to create these charts. So let's get into this, guys. So this was a chart I published on November 14, 2020. And this plays along with the Dow and a couple other things, but I just want to show you the power of these fib circles. This chart, again, November 14, 2020 is a published chart, so I can't change this. But notice every single one of these orange rings is the same fib circle. This is where we peaked in 2017 around 20K. Notice it was resistance. We dropped from 6K to 3K. This is the 200-week moving average, by the way. We pushed up to the next orange ring is support and resistance. And you can see right here, this is the next orange ring up. We did get slight rejection, and notice this orange ring right here. As we were getting closer, I says possible 65K could be the top, and it did play out that way. Let me play this chart out for you. So notice we hit this literally to the tick. And the reason I was saying it was likely this was a top, again, when you're respecting a fib circle to the left, you will respect it to the right. This includes hitting as resistance. I made a video a while back saying potentially on a certain date we could drop as low as 22,000. I do believe if we came down, this is where we would have found support. We pushed up, so hey, we didn't get to find out. But I do believe at any point we come down and test this point, this would be a buy-in point. But I just want to show you the accuracy of these fib circles, predicting potential tops way in advance using fib circles, and how this plays into the Dow and a potential drop. This is that same chart. Notice right here, this is 65K. This is where we topped out. And notice right now, this blue moving average is the 21-week. Guys, typically traders, if we're above, and I'll show you the larger view of this, but if we're above the 21-week, typically that's bullish. If you're below it, you're bearish. So if you're below the 21-week, you're in a bear market. If you're above it, you're in a bull market. But what I like to point out, and I'll show you this on the next chart, is we've dropped below the 21-week, pushed back above it, people get bullish, and then we have a drop. So let me give you a couple price targets. So look, if you want to stay in, again, this is not financial advice, you do what you want to do, but at 43,587 looks close to be where the 21-week is now. So I'd have my stop probably around 42,000 to play it safe if you want to stay in and you think it's going to push higher. I can tell you based on this chart, this is actually the same as the E1 chart. This is the weekly though. If we push up, I know for a fact we'll get at least a temporary rejection at this blue ring. This is also the same fib circle we bottomed on back here March 9, 2020. And again, like I said, if we come down, this is a point to catch a bounce. If we drop straight down, 24K. If it's out here, it'd be like 26,581. I know we'll catch a bounce here, just like I knew we get rejected temporarily here, and how potentially this could be the top to come down, and that's how it played out. So again, if you're respecting the fib circle previously to the left, you'll respect it again. That's how I know if we have a drop, you will catch a temporary bounce here. Now, how far we go up just depends where your support and resistance levels are. But I just want to cover that real quick. This chart, this is called the BTC fib retracements chart. This is under BTC related. I did update this chart. Just hit refresh. You'll see the changes. I'm going to cover this really quick. You'll notice that I have two moving averages down here. This orange one is the 21-week, right? This here is the 200 weekly moving average, and this one here is the 300 weekly moving average. So if you'll notice, this is where we had our peak in 2017, around 20K. This is where we had our peak around 14K and the 24th of June. And really our peak, we kind of flat this kind of has a flat top to it, so it's kind of hard to make out where the peak is. I just put a line here where we had our first drop, where we topped out at 57,000. We did have a drop down, we pushed back up. But I just want to show you, this is the 15th of February. And I think it's possible by October, December, if this, obviously if we push above this, this would be bullish, we could push much higher. I'm not saying that we have to drop, I'm just saying if we do, I want you to be aware of these lower targets where we can find support. But notice what happened back here in 2017. We found resistance, resistance. We pushed above this trend line right here. And then we found resistance at a new trend line, resistance, resistance, resistance. But you can see our support was right here. Support, 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 support. And then we dropped down to the 200 weekly moving average. So same thing right here when we hit 14K and we had support, resistance, resistance, support, resistance. That support flipped as resistance. We had a little fake out to the upside and down we came. Notice we bottomed on the 300 week moving average. So as I'm saying, these are the two moving averages you want to pay attention to. So let's measure. So from our baseline, from our support right here, when we dropped a total of about 45%. It was like 46, a little over 46%. When we dropped from our support back here, we dropped to the 300 week. That's around, what, 49%, right? So it's about the same as our last drop from where our support back in 2018. Same as in 2019. So if this is the pattern we're in, if we're going to do something like this, if we're topped out here to come back down and test support, and potentially we drop, this is the 200 weekly. So maybe the 200 weekly, does something like this. And again, I don't know where it's going to be. This is the 300 weekly. Maybe it comes to this point. Maybe it goes higher. But if we drop just from the support level, and notice that there's some similarities here. Support, resistance, resistance, support, push up. You got support right here. You got support, support, resistance, support, support, push up. There are some similarities to 2019. So if we measure from our support level, if we come down, 45, 46% takes us to this 0.786. Potentially that could be where the 200 weekly moving average is. So a possible target, this is 16,000. If we just came down to the first where our previous high was in 2017, that'd be around 20K. But it depends on where that moving average is. It's very possible it pushes up higher. This could possibly push up and do something like this by the time we drop. If that's the case, maybe we drop to 20K. But if you just go by this previous support drop, 50%, 50%, if 50% does take you down to, 46% takes you down to around 16,000. And if we drop, 61%, that takes us down to around 11,500. It could be any one of these support levels. Again, what I'm saying is wherever this potential support is and closer to this moving average, that's potentially where the bottom's going to be. And one more thing I would like to point out, and I'll show you why I think this might be the date that the drop might happen, if it does happen. But if you notice, this was December 2013. This is December 2014 here. Notice this was our support. This was our resistance, resistance, support. Actually, we had hit it twice. So resistance, support, 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 resistance, resistance, came down to support. Then it flipped as resistance and we had a drop. Well, if you'll notice, this is the 200 week moving average, right? So it probably would come back something like this. So if you measure from our support and when we drop, down to support was right around 46, 47%. We did drop lower. We had a wick all the way down here. But you can see on the daily, it wicked, this section of the weekly, it wicked right back above the 200 weekly. So again, that is around 46, 47% drop from our support level. And if you look at the total, if we come from the very top, we dropped a total of what, 86%? If you just go to our support, that was around 83%. Same thing in 2017. From our top, we dropped a total of 84% to bring us to the 200 week moving average. So if we measure from the top here at 65K, you come down 83%, that takes you right to around 11,500. So it is very possible that is how far we come down. If the stock market has a major correction, Bitcoin's gonna have a major correction too. So again, it just depends on if we're in this pattern currently. If we push above it, then maybe we're gonna go higher. But if we do get stuck in this pattern, I think it's playing out all over again. Because every time we have a little bull run, we had a bull run here, holding support on the 21 week moving average. That's bullish. As soon as you're underneath it, that's bearish, and you have a drop. We had a mini bull run right here. We were above the 21 week. We got below it, it's bearish. We had a little fake out drop. We had another bull run. We had a tear, holding up support on the 21 week. We never even tested it. We just pushed straight up, and then we're underneath it. So we've had these little mini bull runs, but you can see when we have a 50% drop, it's followed by we get in this pattern, and then we have a larger drop. Get in a pattern, have a larger drop. Get in a pattern, have a larger drop. So I'm telling you, pay attention to the 200 weekly and 300 weekly. I do think that's where we're going to bottom. And again, this depends on how bad, if the market's correct, how bad they correct. So let me show you why I think this is the case, October 1st through December. This is Bitcoin, and this is the Dow. This is just showing you what happened when we had a COVID crash. The Dow dropped a total of 38%, and you can see Bitcoin, it dropped a total of 62%. So if the market's correct, the Dow, the S&P, and the Nasdaq, Bitcoin's going to crash twice as much. And we only have one previous, our COVID crash, the 2008 housing bubble. I think that's the last major crash we had in the markets. Well, Bitcoin was, I don't think it was around back then. So we only have one to go by, but we know the last time the market's corrected, Bitcoin corrected twice as much. So I just want to point that out. This is the Dow Jones going way back. This right here, this was October 1st, 1929. This is when we had our, this is the Great Depression. This is when the Dow dropped a total of, 88%, almost 89%. And this line right here, this vertical line, just happens to be October 1st this year. And I'll show you why this, again, the next chart shows why this could be a point we get rejected. This is using Fib circles. That's why I showed you that first chart, this one right here, showing you how these Fib circles are great for finding tops. So let me just show you this. And when in my tutorials, I teach about how I use trend lines. Trend lines don't necessarily have to be just, you can see this was support, this white line here, support, but it also can become resistance and support and resistance. A trend line does not have to just be straight along the top. As long as it's been respected over and over again. This yellow line, it was resistance, 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 support, resistance, resistance, support, more resistance, flipped as support, support, resistance. Then years later, it became support again, support, support, support before he pushed up. So just because price pushes above it or below it does not mean you can't use that trend line. That is an important trend line. For some reason, it keeps getting respected, either as resistance or as support. But notice what happened here, and we pushed up, right? This is when we had the Great Depression, right? We had that major crash. So we got rejected here, and then we had that major crash. We came down, we formed a new support level here. We pushed back above this yellow line as support. This trend line here ended up being resistance. We came back down and tested this yellow line, and then we tested again, and this was our support. Now we had a new support level here. Support, support, support. And notice where we got topped out, this yellow trend line. So if you draw this trend line out, you get rejected here, and you get rejected here, and then it flips as support, support, and then we started, still respecting this white trend line here. But notice what happens. We're above this white line as support for years and years and years. Finally, that becomes resistance. And what happens? We come back down and test the same support level. I mean, this is 50, 60 years, we're still respecting the same support level. It becomes resistance, support, support, support. Finally, we have a new trajectory we follow. So again, I'm just showing you how these support resistance levels work, and how this. And if you'll notice, I have these same lines up here. So right here, you can see this was resistance, support, 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 support. We pushed up, got topped out here. All right. Well, we don't know that this is a point to get rejected. But later you can see that when we came down, this was resistance, support, And then it just so happens this white line that was support going back years happened to be the same point we got rejected this yellow line. This yellow line was our resistance level. And then we had a major drop. And we started a new support level. Support, support, support. That same yellow trend line became resistance and flipped as support. And look what happened. We rode up this line as support. Now we're underneath it as resistance. Look where we dropped. That same yellow trend line that was resistance back here in 1999 became support on April 1st, 2020. And now we are up here as resistance, right? So let me zoom in on this, and I'll show you why I think this date is important and this plays along with some fib circles. So as you can see, this line has been support going back a good ways. Support, resistance, support, support. It became resistance, resistance, support, 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 resistance, and then now it's currently resistance, right? Drop down to this point, and now it is resistance coming up on October 1st. So what's the significance of this? Well, I can tell you this. October 1st is when we had our crash in the Great Depression. I would also like to point out that, I think it was 1918 through 1919 we had the Spanish flu. So that was some years back before we had our major drop. Keep in mind, we've got COVID that's going on. It's closer to this point, but I just like to point out that that is something that took place before we had our Great Depression, for that crash. But you say, well, why this date? Well, that brings me to this chart. This is the Dow Jones crash rings. I created this on 6/21/20. I did update this chart, added this white fib circle. So if you refresh the chart, you'll see these changes. But if you'll notice, this is green fib circle here. Every time we hit a green fib circle, we get rejected. You notice right here, we hit it, got rejected, rejected, we pushed through it. We came up to this green ring, we got rejected. Came back down to this white ring, pushed up, got rejected again. Came down to support. Look what happened at the next green ring. Resistance pushed us down. It became support. Hit this white ring, rejected. Came down to support on the green ring. When we hit the next green ring, we got rejected, right? Well, we're coming up on this next green ring, and it just so happens if we move sideways and up, look where that date is. I don't know if you can see the date here. I have to pull this up. I guess you can see that right here, October 1st, 2021. If we continue sideways, we will hit this green ring on October 1st. Every time, we know for a fact, every time we hit one of these green rings, we get rejected. 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 So it just makes sense. It doesn't have to be a large correction, but I'm pretty confident if you're looking for a point too short the Dow, it would be on or around October 1st, 2021. If we push straight up, let me see here. So if we push straight up with the Dow, you would want to short 37,192. If we continue sideways, you want to short on October 1st, 2021. Again, it could be a small correction, right? And then we push back up and go higher. If that's the case, be bullish on Bitcoin. If the markets push up, Bitcoin pushes up. But if it is a major correction, right? There's a lot of stuff going on in the world with COVID, semiconductor shortages, lumber's prices are going up. There's so much stuff going on that people can't hire. There's a labor force shortage. So this looks like this could be a point where we have a correction, at least with the Dow. And typically if the Dow's coming down, the S&P and the NASDAQ come down, they all move together. So I'm just saying, pay attention to this date. And I already showed you why it is very possible, if this is the pattern we're in, we do know that we respect the 200-week moving average. And we know that we bottomed on the 300-week moving average here. So if this is the pattern we end up being in, and again, the descending triangle is a bearish pattern. So if we do break down, these are the points you want to watch. Potentially anywhere from 19,000 to 16,000, down to potentially, possibly 11,500. These fib channel lines have been these fib retracement lines have been respected. If this is the pattern we're in, I'm saying it could possibly come down that low. And just going by the Dow Jones chart, it's a hell of a coincidence. October 1st was when we had our crash, in 1929, and we're coming up on a ring that would push us down, and there's just too many coincidences here. I think there's just a lot of confluence for something to happen on that date. This is something else, guys, you need to pay attention to. The dollar, the DXY, is the dollar's above, Bitcoin's below. This clearly shows all of these dates match. This right here is January 2nd, 2017. and this blue line here represents the same date. I just have to move these around to kind of match it up, but these dates match. You can see what happens. The dollar was at its highest point, back here 26th of December. The dollar started coming down. What happened? Bitcoin started pushing up. Same thing right here. This is when we had our COVID crash. The dollar was at its highest point. Bitcoin was at its lowest point. Dollar started coming down. Markets and Bitcoin started pushing up. Now look what happened here. Bitcoin topped out. And you can see the dollar pushed up, came back down. Now the dollar is starting to push back up. It's pushing up as I speak. If the dollar continues to push up, that means people are jumping out of markets, jumping out of the Dow, the NASDAQ, the S&P. If gold starts coming down, they'll jump out of gold. Where are they going to jump into? The world reserve currency, the US dollar. That's why Bitcoin is a hedge against the US dollar. If you start seeing the dollar push up, Bitcoin is going to start coming down. So pay attention to the US dollar, pay attention to US markets. So this, again, if this is just showing you, this is another chart I have that shows a lot of resistance above. If we do push up, I think 50K would be the top. I will tell you this, if we get above, let me make this larger so you can see it. The first point to watch to get rejected will be this point. We've got a lot of resistance here. We got this white ring we've been respecting and this yellow ring. So if you push up, around 50K would likely be a point to get rejected. If we push up and hold support above this green line right here, this is around 51,773, I will start to get bullish. So again, if we push up and we hold support, I would buy at this point to potentially ride up and go higher. Do keep in mind, we do have other rings for resistance. That means we could come back down, test the support, and push back up. But again, my point to get bullish is above, again, if you get above this green line right here, this is a very important support and resistance level going back since the beginning of Bitcoin. 51,960. We get above that, I get bullish for more upside. In the meantime, I think it's likely that this could be a fake out to send us back down. And this does depend on the market. So pay attention around October 1st and on and see if we get a correction. This is the E1 chart. Again, I have different charts. All these charts are available on the website. They do play out live. Again, so this is yellow rings, the first point to get rejected. And then you do have this blue flip circle up here, which I just talked about. And again, if we do come down, we will find support on this ring. This ring has been a lot of support and resistance. This is the same ring we topped out 65K, or this is one ring down from that. So again, if we do come down, this would be a support level to catch a bounce. But we have targets below. So I'm just saying, that's why it's good to have these charts, because if you do drop, it's nice to know where you can potentially catch a bounce. And if you drop from this high up, it'll be one hell of a bounce if you hit this point. And I know it will be respected, because respected to the left. And the same flip circle helped us find the top. So I'm going to give you some price targets, guys. That was more macro. This is a video I put out. This was on August 16th. I'm just play this really quick for you. Let me put this in auto. So watch how this plays out. If I can hit play here. So watch how this plays out. You got to pump past the white ring. This is the next pivot ring over here. Notice how we're respecting every single one of these fib channel lines. Alright, we crossed it, we got a pump, and look what happened. This is where we topped out, right here. This was our resistance right at this point, right? And look where we're finding support, and I mentioned this in a tweet also, this yellow line right here. This is currently our support. We break this support, we're coming much lower. It's possible we could get a bounce. If we do, and we bounce back up, your next resistance to watch is right here at 47,000. So, and this is just showing you the power of these charts. So we knew that every time we passed one of these white flip circles, you can see this kind of a falling wedge, these orange lines right here. Well, nobody really knows when you're going to have the break, whether you're going to break to the, it's a bullish pattern, typically these break to the upside, but nobody really knows when that will happen. With flip circles, you get a general idea when you might break. Notice once we crossed this white ring, we pushed up, we got topped out here, it came down, and I'd mentioned, we might find support right here on this yellow line, push up and get rejected at 47,000. Well, if you look at this chart, by the way, this is H1 chart, they're labeled on the website, and when I make a tweet about it, I'll say, hey, check out the H1 chart, we're at resistance. But look what happened. We got topped out here. I said we could potentially find support on this yellow line, push up to 47K to get rejected. That's exactly what happened. We got topped out right here, 47,839. We came down. We tested this. We did come below it, but notice that we wicked back up above it. Look where we got rejected, right here at 47K. Let me get rid of this. There's a light on this chart. Let me duplicate this, right? So like I said, right here, 47,000. I said we would potentially, we would find support. We came back down, tested again. We pushed up 47K. That was the top. We came back down, tested a support. Came back below it. It's resistance, resistance, and now we're above it. So that just shows you the accuracy of these charts. We knew that this was very strong support and resistance. So if we push back up, that's a likely point to take your profit before coming back down. So let me give you your current support and resistance levels. Keep in mind these are at angles, so as time goes on, these prices will change. At least on the H1 chart, your current support level to watch is right here around 45,277. Your current strongest resistance above is right here, 46,952. This is a C1 chart. This has also been a very accurate chart. You see our current, see the next 3-hour candle open right above this line. So your current support right now on the C1 chart is 45,500, and your next resistance above is right here around 46,991. Every single one of these lines will be respected. Notice we topped out right here at this line, so this would be very strong resistance, and these are the support levels below. And again, if you get access to the charts, I have price labels next to one of these lines, and you can see the price to the right. But that pretty much covers it, guys. Just pay attention to that date I told you. Again, October 1st. This line was support. It is now resistance. We're coming up on a point. Not only is it the same day and month that we had a crash in 1929, when we had the Great Depression, it also is in confluence with a ring. Every time we hit a ring, we have a drop. Ideal point to short the Dow. And if it's a small correction, no big deal. Bitcoin might have a little drop and continue higher. But if it is a major correction, you do not want to be in Bitcoin. And again, these charts are available. If you want to get access to this chart here, just go into BTC related. It is called BTC. Let me grab this here. It's called BTC Fib Retracements. It has been updated with this the 21-week, 200-weekly, and 300-weekly. But guys, that's it. If you want to access these charts, the website is optimalartcrypto.com. Link will be pinned in the first comment and description. Again, $39 a month. Get access to Bitcoins, altcoins, precious metals, Discord, and Twitter. Stocks and tutorials are separate. In tutorials, I do teach you my method of charting I came up with to create these charts for yourself. That's it, guys. Till the next video. Trade safe, trade smart. I'm out.